Hi, hello, morning, and welcome to Money Mantra. All the contents in this videos are only for the educational purpose. If you are willing to invest or trade, please analyze yourself or consult with your financial advisor. So today let us discuss about the history of the Tamilnad Mercantile Bank and its investment opportunity. This Tamilnad Mercantile Bank, popularly known as the TMB, it's one of the oldest private sector bank and its rich legacy for over 100 years. This bank is established in 1921 in Tuticorin, Tamil Nadu. It began as a Nadar bank to serve the local trading community. In 1962, it was renamed Tamil Nadu Mercantile Bank to reflect its broader customer base. For more than a century, the Tamil Nadu Mercantile Bank has built a strong presence across India with over 500 branches and loyal customer base, especially among small business retail depositors. Known for its consistent profitability and sound asset quality, the bank has steadily expanded while maintaining the conservative banking practices. So in 2022, the Tamil Nadu Mercantile Bank made headlines with its IPO, entering the stock markets and opening a new chapter for the investors. Today, it is considered as one of the most stable old generation private bank, focusing on traditional banking services while gradually adopting a digital innovation. Crossing the 100 years milestones, TMB carries a legacy of trust and reliability, and as investors assessing its fundamentals, growth prospects, and risk become the crucial to understand whether its centuries old institution can deliver the value in future. So now let us discuss about whether we can buy this TMB Tamil Nadu Mercantile Bank stocks is the right time to buy or not, whether which is the right time to buy. So now let us look at the capital of the TMB Tamil Nadu Mercantile Bank is 6,725. It's a small cap bank. So its price to earnings ratio is 5.6 as our parameter should be less than 15, so it is less than 15 is only 5.6, and the price to book ratio is 0.75, so it is less than 1, it is also good. Then the peg ratio should be less than 2.5, so here is the peg ratio is 0.43, so it is also good. Price to sales ratio should be less than 1, it is actually 1.24, so there is a 0.24 is a great little bit of expense at half. 1 by 4, 1 by 4th of the expense is higher, then the current ratio it should be greater than 1.222. Here actually 0.08. The quick ratio should be greater than 1. Here actually 0.08. The liquidity ratio. So the liquidity is quite lesser in based on current ratio as well as quick ratio. Then the debit to equity ratio should be less than 1 or 0 is the best. So here actually for the TMB 0.06. So it is very good. The debit to equity, the debit is actually very less. Then 52 weeks high and low, the 52 weeks high is 513 and low is 401. Then 52 weeks high low ratio, so the ratio bit is 1.222, here actually 1.28 for the TMB, so it is also very good. Then ROCE is should be greater than 15, but here it is 11.7, it is quite for the banking we can be considered as 11.7 is okay, quite better. Then actually year on year sales growth should be greater than 15, actually for here it is 11.8. So if it is 11.8 for the banking sectors, more than 5% is good for the banking sectors for the private banks. Then profit after tax growth should be also greater than 15. Here actually 10.3, it is much greater, because actually for those greater than 15 are for the industries as well as manufacturing, but for the banking if it is greater than 5% is good. So here 10.3 is good. Then promoters plus foreign institutional investors and domestic institutional investors is greater than 65% if it is good, but here actually there is no promoters, but it is institutional investors, there is no promoters, it's the institutional investors and the public is 4.58. The operating cash flow should be is actually is approximately 27%, so it is greater than 5 to 10 years, it is also actually good. The net profit actually 6% from year on year, it's in the higher increasing order from that 5 to 10 years. Then stocks CMB current market price should be greater than EMA 2, but here it is 446, it is also good because actually the current market price is around 400 and something, it is actually 446, so the current market price when compared to EMA 200 is very good. Then the pledge, promoters pledge should be 0. Here actually there is no promoter, so it is not applicable. Mostly or the institutional investors as well as the public is holding these banks. Then interest coverage rate should be greater than 3 is 0.52. So actually when compared to interest coverage rate, it is 0.52. So we are paying, so the bank is paying quite higher interest for the investors. So here only 0.52. As per our parameters, it should be greater than 3. Net non-performing asset is actually 0.33. It is very less. Actually, the non-performing asset, which is not the money returned back, the interest or the interest or capital is not returned back within 90 plus days. It's 0.33 percentage. So it is almost is okay. Then the CASA ratio, current account savings account ratio should be greater than 40% is very good. Less than 30% is more expensive for the fixed, but here it is 28%. So the CASA ratio is actually quite little bit of lower when we see based on our parameters. Then net interest margin for the private bank, it should be 3.5 to 5. Often here 3.62. So here it is 3.62 is good. Net interest margin is good. Then CAR ratio, capital adequacy ratio should be greater than 15 or very safe. But here is 32.75. So it is very good and very safe because the CAR ratio, capital adequacy ratio is very good. Then deposit is to be increasing order. So the deposits, the banks getting the deposit is to be in the increasing order, 8.40 percentage. Because based on these parameters, when we see these stocks, whether we can buy or not, these stocks we can be buy because it is in the good PE ratio as well as PB ratio as well as PEG ratio as well as based on the overall 5 to 10 years of increasements and deposits, CASA ratio, interest margin ratio, all those parameters, it is meeting above the half of the parameters. So this bank is good, and the bank we can be buy. Mostly you can buy even consider from now itself. At the same time, you can be consider if the bank is being getting 399 rupees, you can be better consider to buy this bank even too. So finally, if you are if you are like this video, please like this video, subscribe this video, and share your friends. Thank you.